Hello, everyone. This is Theo Goodman, and I'm here today with George from semantics.com. Hi, George. Thanks for coming on today.
Hey, thanks for having me.
Yeah, and we have a bear market, I think. What do you think?
Oh, I'd say so. I'd say that we're deep into it, and
I,
bull markets are more fun.
maybe. I kind of like the bear market, or at least this one, because some people have left, some people have moved on, or at least they're not very active. And all the people that became blockchain experts over the last 12 months, where are they? Maybe some of them
Yeah.
are around, but so we'll see what
Well, you're
happens in
right.
the future. I think it's an interesting time.
Yeah, I think so too. I mean, even you're seeing like some of the major companies, like Consensus, having to restructure, doing job cuts. They overexpanded, perhaps, grew too fast. Companies, miners are closing shop. Lots of companies are running out of capital and closing doors. You're getting people who like the Mayweathers of the world. The SEC is coming down on them as well, and all the shills. So yeah, I think you're right. I think like for me, like looking at the psychology of the market now, it's in a much better place than it was during the euphoria phase, where you can actually start to see some sensible stuff happening, and potentially like it's getting bullish psychologically.
Right. And I don't today. I'm just going to touch on the mining thing because that was going around a lot the last few days. But also, believe it or not, I think maybe the next time we'll have to put up that chart. But I think that it's around a year to 16 months for the next halvening. So it's not that far away, actually. And
Yep, that's true.
that's also pretty interesting just to keep in mind. So I'm just going to talk really briefly about the difficulty, and also we've got other things like we've got, of course, Bitfinex is active again, doing more Tether FUD. We've got people like some shills that are saying Bitcoin's going to go to zero and that kind of thing. So those are all real symptoms of maybe the despair phase, or just a bear market in general. People are just kind of tapping out, or just trying to get attention the best they could. Because before, when they got attention, they could just say, well, it's all going up. So now they have to say something else to get attention if they're, just trying, which, if you're doing marketing, do what you want to do. But, just keep
Yeah,
that in mind.
I'd also say that the rise of stable coins, particularly the USD backed ones and the ones that are asset backed, is very symptomatic of the bear market we're in. And obviously when things are going up, you don't want to be stable to anything. But now everyone's screaming and running for the doors, wanting some kind of shelter from the volatility that we're getting. And you have literally like 40 or 50 different stablecoin projects coming up now, and all the exchanges are scrambling to incorporate all these different stable coins now, because there's an investor appetite for it. In fact, if you look at the way the market is structured now, you can say that stable coins have been the best investment of the year.
That's interesting. Okay, yeah. Well, if you took the stable coin and then use that for collateral to short, then yeah, sure.
Yep.
So
Yep.
so yeah, basically, so I think maybe 2019 stable coins will be the next ICOs.
Well, that's right. And also, if you think about it too, I actually don't mind all these stable coins coming into market, because they're on ramps for people to bring dollars into the crypto market. So
Yeah.
the more that come, and the bigger these things get, when that money leaves and goes back into the space, it almost be like a quantitative easing of fresh capital that will be deployed in some way.
I like that's a good analysis. I like that. I mean, for on ramps, it's great. As far as just people holding, I mean, well, stable coins in general depends on the type, the model. They're only
Yep.
as stable as the company that issues them. So you have,
Yeah, that's right. That's right.
you have two things. I mean, there's some that are more complicated, like DAI that's on Ethereum that's
Yep.
collateralized, but it's all complicated, and some others. But in general, they're only as stable as the company that issues them. But of course, liquid companies are issuing them. So
Yeah, that's right.
that makes sense. But still, just something to consider anyway. All right. Well, anyway, we've had the difficulty adjustment minus 15%, which is so-called the largest in the ASIC era. And you know, the theory going around on some FUD articles. So here go again. It's also, I believe, from what I can get, someone correct me, it's also the biggest decrease in difficulty since 2013. So that's pretty damn long. It was estimated even lower at some point, 16% in lower, I found. And so the theory is, this is called Bitcoin's death spiral, that the price falls. And if the hash power drops a lot, then there could be a chain halt, because if there's no hash power, then the transactions aren't getting processed, essentially. And there will be a fork to lower difficulty. But like it says in this model, it's also very unlikely. That didn't happen. And Bitcoin's hash power drops a little, block production temporarily slows down, and then the difficulty adjusts. But so what's happened is the difficulty dropped to minus 15%. But if we just go over here really quickly, this blue line here, the blue line is the hash power. So you can see just when the red line is the difficulty. So right when the difficulty dumped, we did see a small, well, relatively large increase in hash power if you look at it in the long term. So I don't think that you did see a lot of stories of miners getting thrown away, miners closing shop. I mean, there's different mentalities. There's people that are probably in it for the long term. There's people in it for the short term. Maybe miners that just went all in, just mine as much as we can. We don't care what kind of gear it is, just do it. Maybe they just said, okay, we're going to, liquidate all our miners and we're going on to the next. But I think the big shops, a minus 15% difficulty, that's going to be great for them. There's no reason for them to stop mining. So I don't see there being an issue with the hash rate. We didn't see that either in, let's see, in 2015, there was 2016, we got here, look, minus 5%. So it should be fine. So all these articles, are just clickbait pretty much saying that this is over. Here's an interesting one is on Google Trends, is Bitcoin dead? And, of course there was a spike, around December, but maybe that was just Bitcoin in general, but it's really going up. In some ways that's good because there's a lot of attention. There's the search queries for Bitcoin are really going up in general. So even with the price down, maybe people are wanting to sell, maybe people are wanting to buy. There's a lot more news articles because there wasn't a lot to report on because the price was so flat for a while. So we're definitely seeing a lot more interest in Bitcoin right now. And here's another example of people, just trying to get attention any way possible, that got attention by saying whatever they were shilling is going up. We've got the famous Trevon James.
Yep.
You didn't technically lose all your money, but you lost all your money. Trevon James, saying that, Bitcoin, but I mean, hey, Trevon, it's a good way to get attention. So, hey, I gave him attention now. So you're seeing that a lot. You see that a lot in bear market, I think. So, so what do you have today, George?
Yeah, I just have a couple of charts, but before I even get into that, I just like to talk about to follow on from what you were saying about these things. You're starting to see a lot of negativity in Twitter, a lot of people calling for the doomsday scenarios, people who were bears or at the 3K level are now calling for 1K and lower and all this other stuff. And, you're seeing a lot of this stuff because of the different biases that people have. And a lot of it's around, like, you look at things like Daniel Kahneman, he talks about a lot of this stuff like anchoring and price anchoring in particular, where people bought, they have this like, the judgment that influences them is around the price they bought at. And so many people last year bought at these really high levels. And, they've fallen into something called the sunken cost fallacy, where they're kind of like irrationally clinging to price levels higher and trying to justify those levels while we're down here without like giving up their thoughts and their beliefs and changing anything. So it's making them even more negative now as we get lower and lower. And now people are just like, is Bitcoin dead? Like you're saying, people want it almost to die so that they can get it off of their minds and screens and stuff like that. So like the negative biases are becoming even more negative now than they were before, which is really what happens, closer to the end of a giant downward cycle. I mean, I'm not predicting we're in a bottom yet or not. I'd say we're closer to a bottom than anything else. Are we going to go back up anytime soon? That who knows with that. But you're just getting all this negative feedback, and it's all kind of self-fulfilling at this point. So I'll just move to a chart now that I've been looking at, which is kind of like the short ratio, and where that's headed. And we're not at all-time highs on the shorts when I'm looking at the Bitfinex short ratio on TradingView, but we're getting up there closer again. And it's kind of interesting to me because you go into a lot of these Telegram trading groups and all these noobs are coming in and all they want to do is figure out how they can short, right? Like everyone wants to short. Everyone thinks the money's on the short side. And, shorting down here is risky in my opinion. You might get another spike down, but is it going to be fast and furious and catch everyone off guard? Maybe, but we're also consolidating at this level too and have found some kind of minor support in this area, like 3,600 or whatnot. But, the short ratio is starting to rise again, getting up towards record levels, but not there quite yet. But when it starts to rise to those levels, you almost got to take the opposite side of a trade, or at least start thinking that we're going to get some kind of squeeze. The question then becomes, are we going to actually get a true bounce, or is it just a place where shorts will reload and try and take it down again? And you can't really answer that now. We've tried to squeeze a couple of times and it's been pretty useless and futile. They've been really weak, and it's just been shorts reloading every time we have. The only thing that's really going to wipe it out is some buyers coming in with conviction and getting us up to more meaningful levels that wipe out giant short positions. But that might come if this short level continues to rise right now. So that's really all I have to say about where Bitcoin is right now and the market in general. But from the psychology perspective, it's getting to me to a really bullish place. We're talking about all this stuff and the death is imminent. Everything's being shut down. People are, continuing to think the worst, even as price continues to go down and gets to levels of from a risk reward perspective where, you probably want to start looking to add to positions somewhere in here. I'm not going to say exactly where right now, but that's my thoughts on that. So, I was looking at other charts just to kind of see what's going on in the global world and if anything's correlating out there to Bitcoin, or just trying to find some patterns. And the gold chart for me is one of the more interesting ones, only because it's been we had this giant spike and back in 2012, 2011, when the GFC was raging and people thought the world was going to end. And that at the time was the global store of value. Now Bitcoin is starting to be called that and whatnot. I mean, obviously it's still volatile and all that, but look what's happened to gold since really it fell from those levels back in 2013, 2014. It's kind of consolidated in this range, a really tight range, and it hasn't gone anywhere. There could be a year where after this giant down move for Bitcoin, we consolidate in a range like this, while people, new people start to enter the space, while things start to get built out, while, we start to kind of, the judgments of the technology and the merits of it working start to be, looked at and judged on that. You never really know when a bear market is going to end and what's going to catalyze it. But for me, I haven't looked at gold in quite a while, to be honest with you, but I started looking at it recently, and it's interesting, this consolidation range that it's been in for quite a long period of time, and it looks like it could be in a bottoming period, but it's taken a long time. Anyway, my point with putting this chart up was more just to show that bottoming and consolidation periods can take quite a while to fulfill. So for those who are hoping that we're going to get, some kind of V bottom here, I'm not sure. I don't think so. I think we need to consolidate. I mean, the range that will be tested will be bigger though, because Bitcoin was at one point at 20,000, has fallen all the way back down to, you know, where it is today. So you might get some counter trend rallies, but it's going to be quite a while, I think, before, you know, we get back to meaningful levels. The other thing I've been looking at too is the U.S. dollar index, and the reason why is because there is a correlation, or there has been in the past, between the U.S. dollar and Bitcoin, obviously. And U.S. dollar is actually on the rise again, and looking to break out here, almost at a point where I'd say it's close to breaking out. Not quite there yet, but I'd say that would probably be more bearish for Bitcoin than anything. I don't know how bearish though at this point, but you know, a strong U.S. dollar is something that we've looked at in the past when we've talked about these things and thought to ourselves, you know, generally weak dollar environment is better for the Bitcoin price. So, you know, watching the USD, watching what's happening there is always interesting. And then the other thing that I've been looking at, I didn't put a chart up though, is just the Treasury U.S. bond interest rates, the 10-year note. And, you know, we've talked about this in the past as well. Bitcoin basically its whole life existed in a zero interest rate environment. And only recently in the last couple of years as the Fed started raising rates. Actually, I think I might have put a chart up on this. Let's see, did I? Yeah, I did, sorry. So, you know, I wouldn't say the two are related, but rising interest rates, a strong dollar is probably net bearish for Bitcoin and the risk on trade in general, of which cryptocurrency clearly is considered to be a risk on trade. The thing about that, though, that's interesting, though, is that people have been talking about correlations, anti-correlations actually with crypto versus other assets, and what we've seen lately is that they are actually more correlated than people think, particularly with like the S&P and all that kind of stuff. And that might be because of the newer money that's entered the space and how they're perceiving the asset class. But you know, another thing I think to watch going forward is what happens with interest rates in the US. Are they going to continue to rise? Have they truly bottomed down in this 1.5 level, which is basically a double bottom off of like a 12 to 14-year chart? Going back, there's been some people who are claiming this is a really significant level. But, you know, I'd say like watching the interest rate environment, and can the Fed continue to raise, particularly with debt levels high, and can the U.S. dollar continue to be strong? These things will play out in the next year or so. I mean, the world is still kind of in a chaotic state, even though things have been in a volatility lull for a while. So will 2019 kick off some new stuff from a macro perspective that hasn't really entered the equation for quite a few years? I guess, like, you know, right now, like it's hard to say what's correlating with what with Bitcoin. I mean, the reality is it's just been a bear market where everything's been decimated. But I think coming out of this bear market, it'll be really interesting to start looking at these charts again and trying to figure out what the next catalysts are. If you remember, like we had China back in, you know, we were looking at that quite a lot back in the day, and it actually. Yeah, 2016, and it really was a self-fulfilling prophecy. We had wash trading, and that wash trading was just volume being created, but that volume became actually real volume over time. And then we found out later on that a lot of that was money moving offshore because of things that were happening within China, and that was really the next catalyst that took Bitcoin into its great bull run. So I think, like, you know, those are the kind of things that we need to start looking at again and see what's happening from a macro perspective, as well as just from within the blockchain world itself, as more positive catalysts start to happen.
Yeah, definitely.
And that's really all I have.
Okay, great. Thanks. Yeah, just quickly, I've got here, this is the weekly German index, the DAX, so the German 30. And so you can see there's this trend line goes back to I think 2009, so it's pretty long trend. It's been so you can see, you know, that's been going up for a while, and it's just kind of sitting right under this trend line. And here's what it looks like on the daily. You can see. So just this week, you know, it gapped up and it's almost filled that gap again. And then you can compare that to the weekly S&P 500. Very similar. You're going to see, you know, all of these look very similar kind of charts on the weekly. So, you know, it's just kind of consolidating right under that level. So I don't know what's going to happen next either, but it looks like it's revving up to do something that either go down or up. And, you know, if everyone's getting out of equities to get into dollar, and you said the dollar looks good, then yeah, we'll see if that, and maybe Bitcoin dumping was a precursor to a big equity dump. We'll have to see. But I kind of I'm leaning that way because it's 24/7. It's more of a, you know, maybe that's how it's going to be this time.
Yeah, I kind of tend to agree with you on that front. And also, I'd say, like, looking at a lot of charts right now, for me, they're pretty confusing because they're in a neutral position. Like,
right.
It's hard to say what the next move's going to be, but you kind of think that, you know, looking at them, that the next move will probably be something that is pretty vicious in the way it's moving. Like, every time people have been looking at the S&P lately and looking for the bottom or the top, you know, you keep on getting these rallies within it, and you know, it's hard to say when it's actually going to break. But yeah, I mean, I you know, maybe that is true. Maybe Bitcoin is the precursor to what comes next in the equity markets. And you know, gold's consolidation, and actually, you know, if you're looking at the technicals, starting to look better for the first time in quite a while. Maybe that, if it breaks out to the upside, maybe that's a precursor for some other stuff that's going to happen as well. So, you know, always interesting to go back and deep dive out of crypto sometimes to see the forest through the trees, and then come back in to look at Bitcoin and where we are.
Definitely. I'm ready to see the headlines. You know, Bitcoin has caused the next recession because it dumped.
That's right.
Okay. That's right. Thanks everyone for watching. Please leave your comments below and give us a subscribe, and check out the links in the description. Talk to you next time.
Thanks.